Happy April 4th, everyone. Here's S&P at reversal zone on the long trade. Reached Fibonacci reversal zone and doing absolutely nothing. Why in the world is that? Because institutions doing absolutely nothing. Here's the power of long-term charts, and here's the power and importance of trading with institutions. This is a chart that's been present in front of you since last year. This is overextended bullish rally, one of the slowest weeks on record on S&P. Why? We reached crucial Fibonacci resistance. What is the problem? Institutions doing nothing, simply holding their positions. Institutions were doing everything here at trend inception. When day trader taking profits, entering positions at trend inception with institutions. Stunning close of 2018. Here, 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 here. Stunning flawless bullish points of entry. Overextended bullish rally taking a massive pause. Every single time price comes to overextend it. Key targets, price is not reversing. Institutions doing nothing. Here's a very powerful reminder. If you understand what to do with institutions, and if you understand institutional guidance. JP Morgan executive who just finished the course, stating clearly, bias only bullish, no shorts allowed. If you understand what institutions do, if you trade with institutions, knowledge is power. This is long-term day trading chart. This is a chart you can convert to any chart you choose to trade. Do you trade 5? Do you trade 15? Why not? Market spelled out very, very clearly. Buyers continue rallying. Rally goes on. This has been the market since the month of December. No shorts, with the exception of 1 week. Bullish rally is not over. Bullish rally continues on. This Fibonacci resistance is everything. 2900 level is where S&P sold off from last year twice. This is where we are now. The next 2 weeks is everything in the markets for years to come. Let me remind you what S&P looked like last year. This is S&P at the start of 2018. Do you remember 2800 level? From trend inception 1800 until trend reversal. Everyone seeing this? 2 years bullish rally. Why don't we take a little pause and take it a notch back? Another 2 years before. This was 1800 number. Key institutional support. Ultimate place to take long-term positions. Do you see 2800 in front of you? It's a reversal zone. There is no surprise. On monthly key support and reversal zone next. And this is weekly chart. From trend inception to trend reversal. And this is S&P right now in front of you. Shock or not. Not the place to buy, the place to exit. Exact same reversal zone on 1 minute chart. Doesn't matter if you hold position long term. Doesn't matter if you day trade, not the place to buy, the place to exit. Never be tempted to pull a trigger and buy at reversal zone. Success rate less than 20%. This is day trading chart. And this is long-term chart. Let's take a look what played out. Market starts selling off. There is no surprise. None are present. This is the market next. Crucial support 2500 in a play the entire year. This is a market few months later. Key support respected. Market in pain. This is a market another 6 months later. At key Fibonacci support. This is a dance between key reversal zone and this support. And this is the market now. Identical dance. No need to wait for days, weeks and months. You see it instantly every day. This is a dance on weekly. This is key support. Market remains in brutal pain. This is what price does next. Continue respecting this support for over a year, trying to sell off between Fibonacci reversal zone and this support until it finally starts crashing through. No surprise. And this is market next. Reached Fibonacci reversal zone, starts rallying. And this is market this morning to the upside. Reached Fibonacci reversal zone, not the place to buy. And this is a dance on S&P as day trading chart, and this is a dance on S&P as long-term investment chart. And if I take you back again, what would you see? 2 years ago, 3 years ago, S&P in 2016. Bullish rally from 1800 to 2200, taking a massive pause. Election night did not matter. If monkey or donkey won the election, we did not have many good choices, did we? This is what happens next. 7 months war zone at key Fibonacci resistance, but 2300 to follow. Election night we're discussing with students much smarter than Soros. No one is shorting the market. Bullish rally in a progress. And that's a market from 2016 till now. Rallying. And what do you remember? 2300 number. Key Fibonacci resistance is where market rallied from in 2019. All in advance. Never after the fact. And if you understand and learn symmetry in the course, even more. It's key Fibonacci reversal zone. There is no surprise. Not the place to short, the place to rally from. All in advance. Never ever ever after the fact. That's the market. 2016, 2017, 2018, and now. Nothing else will ever give you this much accuracy. I recognize that extremely clearly in 2007, when market was crashing and stocks with stunning fundamentals did not mean a thing. Fibonacci reversal zone meant everything. And that's the market now on 1 minute chart, just like weekly at the start of 2018. Just like any instrument you choose to trade. This was Amazon at the start of 2018. To remember this. Frozen at key resistance for months, showing you 2000 reversal zone, not the place to buy, the place to exit. And this is what Amazon does next. Shock and not comes out with stunning earnings, reaches 2000 level. Boom! Crushes $700 per share, not the place to buy, the place to exit. And this is Amazon next. And this is Amazon now. Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. This is Amazon now. And what it will do next at 2000 is very, very important. Buying into reversal zone, never a good idea. Success rate less than 20%. Knowing where to enter and exit your position is the key. Bullish rally overextended. Amazon not far off from reversal zone. Collapse of $700 per share is exact same place where little junky chart on S&P is now. Choice is yours, what you want to trade. If you choose to buy at reversal zone, what is the best case scenario? Pain and torture. Less than 20% of the time. Price reverses completely 80+% of the time. As S&P doing right now. What is the problem remains? There is no spectacular sell-offs. They're worthless, bearish pullbacks. However, to the tick price reminding you, not the place to buy, the place to exit. This is exact same thing Apple had done. Do you remember what Apple looked like in 2018? This is a start. Apple doubled in value, skyrocketed from 91 to 181 despite worst earnings in 13 years when Apple was at 91. What do you see ahead? Fibonacci reversal zone, which Apple reaches next. After the earnings, Apple reaches next level, all identified in advance. And here comes the fun part. It's a reversal zone, not the place to buy, the place to exit. Apple in a lot of pain, just like S&P now. There is no bad news on Apple yet. There is no poor reports on iPhone pricing. Apple comes out with that data when it's already at 200. And what else do you see ahead? 140 trend inception, Fibonacci reversal zone. And this is Apple next. Reaches Fibonacci reversal zone. Many, many months later. Boom. This is Apple now. All in advance. Never ever ever after the fact. And that's the power of the method. 12 years later. Choice is yours, what you like to trade. Reversal zone, not the place to buy, the place to exit. Market is flawless Fibonacci puzzle. Everything else, background noise. S&P in pain, just like Apple, just like anything you trade. All in advance, never after the fact. Minutes, hours, days, weeks, months and years, no matter what you trade. This morning, one of the most crucial moments in years on Tesla. Look at this level. It's crucial Fibonacci support. My goodness, this is a chart we've been watching on Tesla for the last 2 years. Do you remember what Tesla looked like at the start of 2018? This is Tesla, 2017, 2018. This is a range. 255 lifeline on Tesla. 388 is a reversal zone. Exact same place where S&P is now. And this is Tesla next. And that's the dance on Tesla. The entire almost 2 years. 255 key support. Not the place to short. Once you master price, once you understand price action, the skies are the limit to ultimate accuracy, ultimate profitability. This is Tesla now. Testing 255 again. What is the problem on Tesla? This is a channel. Key Fibonacci resistance and key Fibonacci support. Doesn't matter what Elon is smoking or fighting with SEC or how much he's dropping the price on Tesla. The only thing that matters, it's key Fibonacci support. Do not short. Remains intact. And if it crashes through, it's a gift. 211 next, present in front of you, years in advance. And if it crashes next, 145 to follow. And if it crashes next, 79 all the way to 12. But first things are first, 255 lifeline on Tesla. Exact same level where Apple rallied from and doubled in value from 91. Exact same level S&P testing now. Nothing else matters. Market is flawless Fibonacci puzzle. Everything else background noise. All predictive with ultimate accuracy, and if used properly, ultimate profitability, no matter what you trade.